Hi there, welcome to Kneppy Invest and welcome to August 15, 2024. We have over 2 hours left of training today. Yes, I'm getting a bit of an early start to this video. I am in between two night shifts. So I just woke up from a 3 hour nap. I actually went to bed at about 9:30. So I did miss a few. Actually, it was that more like nine. So I did miss a few yearly results that did come out after 9 p.m., including Magellan Financial Group. And I did change my top five stocks of the day because of that. The share price of that particular company, last time I looked, was up actually nicely, 8%, 9%. And I think that deserves to be in the top five stocks of the day. Not all the companies in the top five released financial results. One did not. In fact, this company released a profit downgrade. And I actually do prefer profit upgrades and downgrades over financial results because a lot of times you will see the share price of a company significantly move when they released that sort of announcement, in particular, if it's a profit downgrade. And that company is Nufarm. And I would assume the share price is down a fair bit. Actually, didn't have a check of this. Yeah, down 10%, which is not surprising. I had a choice of many, a plethora of companies. I love that word. To choose from today. I have come up with that top five, but lots of companies missed out today, including Origin. Yes, so I left Origin out. I left Pilbara and Latin Resources out because there is a takeover bid for Latin Resources by Pilbara. Latin Resources share price probably is up about 50%. Let me just clarify, check it. Yeah, 50%. Right on. There you go. And then we have maybe 13 companies who released half-year results who got nowhere near making it into the top five stocks of the day, including some pretty big companies. I'm looking at you. Actually, no. Yeah, Telstra. I'm looking at you, Telstra. Goodman Group, Treasury Wines, and quite a few small companies as well. Some of these small companies have like a markup of $10 to $20 million. Anyway, if I do get time, I want to have a look at least one chart. Fenix Resources share price has dropped like a rock recently. That probably has something to do with the iron ore prices. And I will hopefully touch upon a few companies that did not make it in the top five. So let's get stuck straight into it. But first, let's have a look at the ComSec reporting season. So we are at the 15th of August. So in our group, yep, NWH or NRW Holdings, number one, by the way, Origin Energy, Arena, Riet, Goodman, Telstra, Magellan Financial Group, Cochlear, Treasury Wines, and Centuria, and then Pack Group. Don't really care about Pack Group because pretty sure there's a takeover bid for that company. And then many companies not on this list. So this is not a comprehensive calendar from ComSec. It has left out quite a few companies. And I'm just looking at tomorrow. Tomorrow is quiet. So according to this calendar, only 4 companies releasing their results at a minimum. And those 4 I have very little interest in. Amcor, Domain Holdings, why not just go REA Group, ASX, and Charter Hall Retail. But next week looks interesting. I went through this earlier. And yeah, next week looks really good. Although this whole month looks really good, particularly the last few weeks of the month. Now, what I'm looking for, and I've come to the realization that the only thing missing is sometimes when I see the share price up or down a fair bit, is it because the results beat or miss expectations, or is it because of their outlook? And what I want is some sort of site that tells me or shows me the guidance or the expected results for a company before they release their results, sort of like the earnings calendar that NASDAQ has. So this is for Thursday, August 15. In fact, a few big companies are releasing their results, including Walmart, Alibaba, and Applied Materials. And what they have here is a consensus earnings per share forecast, last year's earnings per share forecast. And if you go back in time, they will tell you, if we go back to Tuesday, they will tell you the earnings per share the company achieved. And the surprise, I love how NASDAQ does this, because a lot of times the share price of a company will move whether the earnings per share or the results, revenue, whatever, beat expectations. Also, very important, guidance, whether the company releases guidance or not. So I have been looking for that on the ASX, but I did find one. I think that was investing.com, but it was just a few companies. So if you know of any sort of site that has that, has a list of all the companies' expectations or their results expectations coming into results season, I would love that sort of list or that site. So leave that in the comment section of this video if you know. Okay. Oh, there is a tweet. I just want to talk about this tweet really quickly. For some reason, I didn't open up Twitter or X. Yeah, this one. Here we go. Just in, Warren Buffett just updated his portfolio. So this is great. I love how Americans do this. You can go to any sort of fund manager over there and have a list of all the companies they've invested in. Apple, still 30% of their portfolio, down 49%. So is that accurate? Bank of America, American Express, both over 10%. Coca-Cola, 9%. Chevron, 6.6%. Occidental Petroleum, so this guy or this firm loves their oil, 5.75%. Kraft, Heinz, 3.75%. Now, I have mentioned before that Berkshire Hathaway did make a mistake of buying Kraft Heinz, and the share price has significantly dropped. But I learned something new today. I didn't realize Kraft Heinz, that there was a merger. Berkshire Hathaway already owned one of these. Berkshire, I'm just going to Google it because I'm going to make a mistake if I try to remember. Okay, it was somewhere here. So Berkshire Hathaway owned either Kraft or Heinz. I can't remember which one. And then in 2015, there was a merger between Kraft and Heinz. So in fact, Berkshire Hathaway has been holding Kraft Heinz since 2015. I thought they actually bought. Buffett and Berkshire Hathaway actually bought Kraft Heinz. Oh, what the heck? KHC, that makes sense. I thought they bought on market this company, but no, it was a merger between a company they already own. And just have a look at the share price drop in 2018-19. It fell from almost $95 all the way down to about $20. So again, Warren Buffett can make mistakes with his investments. In fact, the valuation of Kraft Heinz since this merger has more than halved. So don't go believing that the best fund managers in history, like Warren Buffett, Peter Lynch, never make mistakes or never made a mistake. They do. We're supposed to make mistakes. That's the whole point of being human. If you don't make mistakes, maybe you're not a human. Maybe you're a robot or something. Who knows? Maybe you are a robot. I don't know. Okay, so let's get to and we don't know. Let's get to the market today, the ASX today, and overall, pretty okay day. We'll call this an okay day. Tech up, mining down. I didn't have a look at what happened on the American markets overnight. It was last time I looked, and this was quite early in the night. It was fairly flat. It was just up a little bit. And yeah, NASDAQ up 0.1%, Dow Jones up 0.61. So I'm not sure why tech is rallying today on the ASX when the NASDAQ is down more, well, not down, but hasn't risen as much as the Dow Jones. Gold up. What else is down? Copper is up. Not much red when it comes to commodities, so I'm not sure why commodities are down. Maybe that was yesterday. Iron ore is down, and that makes sense. Oh, gee, what happened to iron ore today? I don't know if that's real, but iron ore went on a bit of a swing today, according to a trading view. Yeah, I don't know if that's real. Apparently at 11 a.m., the price of iron ore went up to $107 and then all the way back to 97. Not sure if that is real. Anyway, so pretty good day on, well, I think pretty good day, or saying pretty good is being a little bit over dramatic. I would say this is an okay day, unless you're in mining, and then you're probably saying it's an absolutely horrible day. So let's have a look at the best and worst performing sectors and indices. Telecommunications up 1.8%. I wonder if that's because of Telstra. I don't think Telstra was up by all that much. And to be honest with you, I'll be absolutely honest. I probably I probably, what's a good word? I probably dig into, that's not sure that's the right phrasing there. I do bag Telstra Group quite a bit. I always mention this is a really low quality company, and I actually didn't mind their results. However, when you look at valuation, I just can't get there. In fact, I'm pretty sure in ComSec, the P ratio, yeah, 20.7, and it hasn't changed all that much from that. So buying Telstra at a P ratio of 20.7 is a little bit ridiculous for me. Even the dividend yield is fairly weak at 4.5%. So I don't mind the results. There was a little bit of growth, and that's the main thing I want to see when it comes to Telstra, because this company has not grown over the past 20, 30 years. So seeing just a little bit of growth is actually good for this company. But share price only up 2.71%. Anyway, this video is not about Telstra. In fact, that might be the only time I talk about Telstra. Actually, I'll have a look at the chart for Telstra later. Financials, good day. Discretionary, industrials, IT, all a pretty good day. Staples, energy, relatively flat. Same with real estate. And utilities down 4%. What is happening with utilities? What could be down a lot today in utilities? Is this driven by one company? Let's have a look. Is it Origin? Is that it? Is that all it is? Origin down 10% and share price. I didn't put Origin in my top 5 stocks of the day. Down 10%. I think it deserves to be in the top 5 stocks of the day. Which companies should I leave out? I don't know. I'm going to leave it out for now, but that's why utilities is down, it seems, because all the other companies are up. So utilities has been significantly affected by Origin Energy, which is interesting in itself. Anyway, so let's go back to the ASX 20. Gold, by the way, flat. It's one of those rare days where gold has done nothing. Either it's up by 2% or down by 2%. Maybe up 3%, down 1%. Today it's flat. And let's have a look at the ASX 20. I'm assuming all the banks have had a good day. Is Origin in the top 20? I don't think it is. So I'm assuming iron ore companies down. So at least 3 companies down. I'm going to say 16 up, 4 down, 13 up, 7 down, and iron ore companies down. So let's have a look at the change. Rio Tinto, Fortescue, Goodman Group down. Did release the results. Not much of reaction from the market. I would have thought maybe a little bit weaker. But again, maybe the results beat or were close to expectations. Probably not beat, because if they beat expectations, share price would be higher, would have risen, not lower. BHP, Santos, REA Group, and CSL. Best performing companies in the ASX 20 today. Telstra, there we go. Telstra, good day for Telstra, and Westpac, ANZ have had a good day as well. And that just means those banks are even more overvalued. Probably not as bad as CBA, but maybe up there. And CBA's up. Not sure why anyone would be buying CBA right now. That's just me. I could be wrong. Maybe CBA will go on a bit of a growth spurt over the next 5 years. And that's the only way it could justify the current valuation. Okay, so let's have a look at the top, not top 5. Let's have a look at the best and worst performing companies on the ASX today. Starting with the top gainers, hoping quite a few of my companies or top 5 stocks are in this list, and I'm pretty sure they are. Latin Resources, already mentioned that. There is a takeover bid for Latin Resources by Pilbara Minerals, and I'm pretty sure Pilbara is down. Does that mean the market doesn't like it? Possibly. So Pilbara down. Now, I am going to say something here. I think this is an opportunistic acquisition. So we'll just have a very quick look at Pilbara. So it's down, yeah, that's understandable. Is that the week? No, it's 5-minute chart. I'm going to say I don't see it down 5% there. So share price at a multi-year low. Last time share price of Pilbara was this low was back in June 2022. So we're talking about a 2-year low for Pilbara. But have a look at Latin Resources chart. So the takeover bid, I think, if I remember correctly, is at 20 cents. 20 cents is not that much higher from where the average share price is. So if you just draw a line at 20 cents, over the past 2 years, the share price has been significantly higher than 20 cents and not much lower. Share price has been on a bit of a dive recently, which is understandable because of lithium prices. But I do think this is an opportunistic takeover by Pilbara. And to be honest with you, these are sort of acquisitions companies should make when, I wouldn't say Latin Resources is distressed right now, but the valuation is distressed because the share price is at multi-year lows. So this is the way you should do it. Probably the best way mining companies should, well, what's a word? Best way mining companies should use capital is they should build up their capital when times are good, really build up their capital. And because mining is quite cyclical and eventually times will turn a little bit nasty, bad, when that happens, they should use their cash and buy up distressed assets. They do, it seems like mining companies do the complete opposite of that. They sell when cycles turn bad and buy at near the top of the cycle. But saying that, Pilbara Minerals possibly buying Land Resources near the bottom of the cycle, which could be a good thing. Okay, what else is on this list? Nothing. I'm going through this fairly quickly, so I might skip a company, but Fiducian Group up 13.33%. Really happy is on the list. It did make it in my top 5 stocks of the day. I'm a little bit biased. Because I'm a shareholder, I had a look at their results and I went, oh, these results are really good. And this company just keeps on hitting it out the park. Another good result from the company. And it's not even expensive. The company is still pretty cheap, in my opinion, just my opinion. So happy Fiducian Group has had a good day. Did not make it number one. NRW made it number one, but that's okay. Now let's have a look by market cap. AGL. Okay, I don't understand this at all. So I am trading AGL. They released their results yesterday, and I thought the share price would fall because of concerns about the outlook, but the share price went up. Today it's up again, just like net wealth, by the way, and Origin is down, and I can understand why Origin Energy share price is down because, again, their outlook was a little bit weaker, which is understandable. So not sure why there's a bit of discrepancy, bit of what's the good word there? There's some sort of difference in market expectations or realization of the company's results when looking or comparing Origin to AGL. Origin's down significantly, AGL is up significantly. I don't know. Maybe it's to do with valuation. Net wealth has bounced after a few down days. How many down days did it had? Maybe just one. When did they release the results? I can't remember. They released their results a few days ago, 3 days ago. And yeah, Magellan Financial Group up 8.97%. So I am on the lookout for breakouts. So Magellan, possible breakout. NRW Holdings, possible breakout, coming in number one on my top 5 stocks today. And the reason that company is number one over Magellan or even Fiducian is because it looks more like a breakout. BrainChip's had a pretty good day, but I don't really follow that company much anymore. Baby Bunting. I can't remember any of these companies releasing anything interesting today. So some of this movement in share prices is more than likely a little bit of noise, that sort of thing. So you do get a fair bit of noise when you're talking about just one day movements in share prices, unless the company has released something significant like financial results. Let's have a look at the top losers today. And again, I think some of this is going to be a noise. I'm looking at the market cap and they're really small. Titomic down, that share price, that company's all over the place. Ignoring that company for now. Otherwise, nothing. There's Origin all the way down the bottom, down 10%. Oh, Nufarm. I should not forget Nufarm because they released a profit downgrade and it's in the top 5 stocks of the day, down 10%. Let's have a look by market cap, and I'm assuming that Cochlear down 8.65%. That also made into my top 5 stocks today, while Origin Energy didn't. Interesting, Michael. Nufarm did. Temple Webster has dropped a little bit, so probably some profit taking there. So a couple of good days for that company today. Not so good for Temple Webster, and I actually could definitely see this happening because I just was grappling with this company's valuation, even though really good revenue growth, just the margins and valuation. And I think maybe today some fund managers went, oh, yeah, the valuation is pretty high for this company, even though results were okay, well, maybe even pretty good. So not surprised share price has dipped a fair bit for Temple Webster, and the one-day candlestick looks absolutely weak for that company. Elsewhere, Pantoro, Mount Gibson, Iron Ore, Grange Resources, iron ore. So iron ore has had a pretty weak day. Fenix Resources, iron ore. There you go. Don't want to be heavily invested in iron ore today because today has been a pretty bad day for you. In fact, Fenix Resources, I will have a look at the chart for that company at the end of the video. It is starting to look a little bit more interesting, but the share price has dropped a significant amount in the last 3 days. Okay, so let's get to the top 5 stocks of the day. What I'll do is I will do the top 5 stocks of the day, and then I'll talk about some of the other companies that did not make it, including Origin. It should have made it, maybe. And then I've already talked about Pilbara and Latin Resources, and then I'll touch upon some of the other companies that released results today. There's a lot, like 15 other companies, and I really want to go through those companies, looking for breakouts. That's what I'm doing. I'm looking for breakouts, but preferably for a breakout, I want to see the share price up on pretty good volume. So a lot of these companies' share price are not up. So more than likely they're not breakout. So coming in number 5, we have Cochlear. I did buy Cochlear on the release of the results in February, and this was another instance of valuation. I saw the results. I went, these are pretty good results. I'm going to buy some shares, but I again grappled with the valuation of this company. So the company had to really hit it out of the park for me, and I think the market to realize this valuation of the company is probably justified based off their results and also based off their outlook. Obviously, share price down 8.7%, and this is the opposite of a breakout. In fact, if I did own Cochlear right now, I'd probably be a little bit more nervous because of valuation. Share price could drop 35% from here, and still you could argue it's overvalued. I don't know. I haven't done that. But anyway, the company did release their results, and I would actually say the results were okay maybe, but the guidance was a little bit weak. That's the main takeaway I took from this. Now, I could be wrong, and maybe the market expected better numbers for financial year 24. Maybe the guidance was to expectation, so maybe it's the other way around. But there was something in this that the market didn't like. Now, when you do compare financial year 24 numbers to financial year 23, it all looks pretty good. I mean, if you compare these to, say, Pro Medicus, the percentage change is not that far off. Pro Medicus, not that far off if you look at reported, not constant currency. So we're talking about underlying net profit up 27%, revenue up 15%, statutory net profit 19%, underlying earnings per share up 27%, and even the dividend up 20%. That's a final dividend, total dividends up 24%. So it's all moving in the right direction. Underlying net profit margin up by 1 basis points. So that's pretty good. Then in the this little box here with the highlights or the bullet points, down the bottom, financial year 25, underlying net profit guidance range is 410 to 430 million. And thankfully, they did put in there the percentage increase. So that's a 6 to 11% increase in financial year 24. And I saw that and I went, oh, that's a little bit low for Cochlear when you look at this company's valuation. So let's do their valuation right now. So they have earnings per share. There is an underlying earnings per share of $5.90. So we'll go with that. That's probably the best earnings per share to use. So $5.90, and the share price is $308. So $5.90, 308. Simple maths. This company has a P ratio of above 50. 308.39 divided by, what was it, 590? 52.3. Did I get it right? 590. Earnings per share, yeah, 590. So this company has a P ratio of above 50. With that sort of growth, 6 to 11%, ooh, I would want a little bit higher. So I think that's probably the reason why the market has sold off on Cochlear. So let's have a look at the chart for this company, and I'll show you. In fact, I've kept where I bought on my last trade for this company. There it is, $308 on the 8th of February when they released their results. So it's only 6 months ago. And I sold pretty quickly. Share price rallied really nicely after that. And I sold just in this little bit of a dip. And the main reason I sold was the valuation. I just went, I'm not sure if, even though they did release pretty good results, I'm not sure I could justify the current valuation. And after I sold, share price just went sideways. And today, this is the complete opposite thing you want to see for the movement of a share price. If you put a line right there, and that's a fairly significant line, This would be a breakout line, and it's been supported a few times during the past 6 months, and the share price is now below that line. And the volume today is high as well. So higher than average volume, share price down a fair bit, negative financial results. So not a good day for Cochlear. So maybe this is the end to this uptrend, which has been going on for a while. So in fact, Cochlear share price broke out, moved into an uptrend, maybe not broke out, but moved into an uptrend back in February 2023. So a nice run. And that share price then was just above $200, by the way. So even if you sold now, you've made a nice 50% profit over the past 18 months. So that's Cochlear. I'd love to hear from any shareholders in Cochlear. I would assume the moat for Cochlear, their ear implants, is pretty strong. I don't know about any competitors. So the moat's pretty good, but it's just a valuation. If Cochlear's P ratio was like 20, that would mean the P ratio of this company is lower than CBA's and Woolworths. And yeah, there's no choice then. It's Cochlear 100% of the time, without doubt. Maybe I'm being a little bit biased there. Anyway, so that's coming in number 5. We have Cochlear, Magellan Financial Group. Is the tide turning for this beaten down fund manager? Share price up 7.4%. Share price has fallen a little bit today, got as high as $10.79. They released their results at 9:50, so I was probably asleep by then. They also announced a strategic partnership with Vinva Investment Management. In fact, I saw that announcement first when I came back from my nap, and I thought, oh, the share price has rallied because of that. No, then they released their results 30 minutes later. What I'll do is I'll open up the media release. I did have a quick look at this, and I think there is definitely an argument, if you want to make, that things are starting to turn positive for this company. They're starting to see institutional inflows, $6 or just shy of $1 billion in the fourth quarter, and further inflows in July 2024. So they're hinting good times are continuing into the new financial year. If you want to have a look at profit up, dividends, I'm not sure if dividends are up, disciplined cost management, that's fine. Disciplined cost management is fine, but I'm not the biggest fan of companies increasing their profit through cost reduction, because cost reduction can only go far. I need to see revenue increasing. Average fund under management fell a fair bit, but profit rose. Adjusted diluted earnings per share up to 98.2 cents. So we'll say about $1, which means this company has a market cap or P ratio of about 10 or just above 10. Doesn't seem that high for a company that could be turning around. Now, they also did this partnership. Now, I can't really value this partnership. I have no idea. And if the share price rallied because of this partnership with whatever it's called, Vortiv or whatever, what's it called? Where is it? Vinva Investment Management. If the share price rallied because of this strategic partnership, I probably would not have, no, not probably, I definitely would not have included Magellan Financial Group in the top 5 stocks today. So I'm just assuming here the share price has rallied because of the results, which could be a pretty bad assumption because who knows? Who knows what the market is thinking? I did like some of the commentary from the executive chairman, Andrew Formica. Now, you might argue that a lot of times the board members or the CEO, managing director is going to be a little bit ebullient or a little bit flowery, not flowery, but embellish their performance, make it seem better than usually it is, or it is. But that's not always the case. And sometimes you can find a lot of information just by looking at the commentary, not even the numbers. So the company has made significant progress in financial year 24, restoring stability across our business and establishing the foundations for future growth. That's okay. That's just a throwaway line, in my opinion. But it goes on and on. Yeah, a fair bit of commentary here. This is not what I read this morning. What I read this morning was I might have opened up one of the other ones. I don't think I opened up the presentation. Anyway, what I opened up and what I read, I actually did like. And I thought, things are starting to turn around for Magellan Financial Group. And this could be a turnaround story. And not only that, when you look at the chart for this company, it's getting close to a breakout. So what we're seeing here, so this is a chart going back to middle of 2022, so 2 years. Share price in a long-term downtrend. Share price starting to consolidate and go sideways. On occasion, you see a swing in, or you see a bit of a rally in the share price that falters. We've seen that happen 3 times, at least 3 times. You could even say 4 to 5 times over the past 18 months. This is going back to the start of 2023. So let's just zoom in a little bit more. So we're looking at this period here. We've seen a few rallies, and those rallies falter when the share price gets to about $10.50. So we saw it happen once, twice, almost 3 times, 4 times, and again, not that long ago, a few weeks ago. In fact, on August the 1st, share price got to $10.26, so just shy of $10.50, although my support line, or resistance line, is about $10.40. Today, share price is just on or straddling that resistance line. So there is a potential breakout. I'm not going to call it just yet because there was a potential breakout for Magellan back in August last year on their results. When they released their results in August last year, the share price went up 13.3%, so a little bit more than today. And then the share price 2 days later was got to a high. In fact, it got to a high that day of $11. And it did look like the share price was trying to break out. And then for some reason, on the 23rd of August, share price dropped 8%. Don't know why. And then not long after that, share price plummeted on the 6th of October, down 18.5%. So the share price has been consolidating for a little bit longer now, for an additional 1 year. So there's less resistance moving forward. And the chart does look better now compared to August 2023. So this is on the precipice of breaking out. I could see myself taking a position in this company if I do like what I see over the next few trading days. So not really based off the results. Results are promising. The commentary was promising. And I just need to see further proof in the chart. So that's Magellan Financial Group. Coming in at number 3, we have the only company that did not release results today, Nufarm, share price down almost 10%. Trading update, my favorite type of announcement. I'm sorry, financial results. I'm sorry, financial year results or half year results or quarterly results. I do prefer trading updates because, in my opinion, these are the most powerful type of announcement. Because usually trading updates can be negative, could be positive. You can see the share price rising 20% on a trading update or dropping 30 to 40%. So with the share price down 10%, we straight away know this was a negative trading update. But if you're reading this before the market opens, how do you know? Well, it's pretty easy. They actually changed their underlying EBITDA numbers or expectations, and it was not good. So they now expect EBITDA or underlying EBITDA to be between 300 and 330 million. Previously, they expected EBITDA, or they reported their expectations on underlying EBITDA would be between 350 and 390 million, and that was released on the 23rd of May, so only 3 months ago. So a pretty big drop in underlying EBITDA. That's not the sort of thing you want to see. Now, one of the reasons why they have decreased underlying EBITDA, I actually did see this somewhere. See if I can find it. It's weird that I went through this really quickly and I saw this, and that's probably one of the only things I saw. And now, of course, I can't find it. Has to do with their omega-3. I think it's something to do with the omega-3. What I read this morning, and I was a little bit tired, but I'm pretty sure it has to do with omega-3. It was really interesting because this reminds me of Grady Wolf on Core, who loves this company, always putting buys out because of omega-3. And it was just funny to read this. And the reason why they've done a profit downgrade was because of omega-3. Okay. And usually when a company does release a profit downgrade, they should put in the reasons why. Actually, they're saying it's a temporary downturn in the industry environment. Yeah, that's debatable. Resulted in competitive pressure, causing adverse movements in price and product mix, which are particularly impacting in North American crop protection business. They're an agricultural company. That's the problem with these type of companies. They're agricultural. These conditions are also reflected in recent peer group reporting. We've also seen lower than anticipated demand for industrial products, from a manufacturing facility in Wyke, which has negatively impacted our European crop protection business. I'm sure they mentioned omega-3. I'm certain they did. They mentioned here, and they actually mentioned doubling of omega-3 revenue. But I was certain this morning, I read it, and they were blaming omega-3. Maybe I just made it up, because that's the only announcement they did release. Okay, so let's have a look at a chart for a Nufarm. So I am on the search of a breakout, but this is not a breakout. This is probably the opposite of breakout, just like Cochlear. This is the probably the only positive thing you could say about Nufarm right now is the share price is in a support zone. This big purple box, and to really see this support zone, let's have a look at the weekly chart. So when Nufarm share price gets between about $3.50, I think that's $3.50. Yep, $3.50 and $4. That's a support zone for this company over the past 5 years. Yeah, this goes back to 2019. So back in 2019, or between 2019 and 2021, share price got to a low of about $3.50 in October 2020. And so this is the lowest the share price of this company has been since 2020. We're talking about a 4-year low, but this area tends to be a support zone for the company. So that's the only positive thing you could think of when talking about Nufarm right now. So maybe valuation, maybe that's it. But again, agricultural companies, it is a hard business, and any sort of downgrade could happen at any time. Saw that with Costa Group. I would buy Costa Group quite often on a trade, and then the next update would be negative because of a blight, something affecting their strawberries or their blueberries, or something negative happened in something they grow. It's management have no control over weather, no control over diseases, that sort of thing that could affect their crops. Anyway, so that's Nufarm. And I probably have to apologize to Grady Wolf, because I shouldn't have a go at her. She does a good job. But yeah, she just loves that omega-3. And I just thought the reason why they were doing a downgrade was because of omega-3. But planting of omega-3 canola in 2024 continues to support expectations for more than doubling of omega-3 revenue in financial year 25. So maybe Grady Wolf is right. But I think she's usually with, actually, no, here it is. Here it is. The business has achieved lower than anticipated pricing for its omega-3 oil, which has negatively impacted expectations for financial year 24. There you go. So that's what I read. It's funny. It took me ages to find it, and eventually, when I wasn't even looking for it, I actually found it. So there was a bit of negativity when it comes to omega-3, but maybe it's going to improve in financial year 25. Anyway, Grady Wolf is usually on with Howard Coleman of Team Invest, and I'm not the biggest fan of him, because I can see the list of companies and I can almost tell you what he's going to say about those companies before he says it, because he does the same thing for every single company. He mentions the same things, return on equity, that sort of thing. And Nufarm, he would not like this company. Yeah, he would not like this company at all. Sometimes I actually skip whenever he's on, because I can actually look at the companies and say, and know exactly what he's going to say. Mark Moreland, who is also Team Invest, I do prefer him over Howard Coleman. He is a little bit more flexible with what he says. There's another guy with Team Invest also. I forget his name. I actually do prefer him as well. But yeah, Howard's a little bit too predictable. I do like a little bit of variation when it comes to your thoughts on a company. Just don't spit out the same thing. Return equity has been good. Hasn't been trading for 5 years, so we don't know. Can't tell you. Oh, it's not profitable. That's a horrible company. No. That's the sort of things he would say. Okay, so that's Nufarm coming in number 3. Coming in number 2, I'm a little bit biased with this company. I am a shareholder. Fiducian Group, up 11.4%. Can't be disappointed with that. Nice results. If you have a look at Comsec, P ratio of this company is 18.8. So that's before the results today. So as soon as I see a company I own release their results, I do get a little bit excited. I do get a little bit, hope it's good. And usually Fiducian Group releases pretty good results. Usually. So let's have a look at this company's results. Won't open up their presentation. We'll just have a look at the preliminary final report. They didn't release, according to this, they did not release a media announcement. Most companies do. And this is actually the first thing I opened up, the Appendix 4E. And revenue up 10.2%. Profit up 22.1%. So that means increase in margins as well. I'd like to see increase in margin. So a pretty good day results for Fiducian Group. So profit up to $12.3 million with a markup of 231. It means their P ratio actually is about 20. Yeah, it's about 18. Maybe Comsec is right on that. Anyway, so the results were pretty good. At this company, I'll just show you what I'll do is I'll show you the history of Fiducian Group, and I'll just show you why I own this company. It's a small company, markup fairly low, but this company has just grown consistently over time. Now, I don't think they have a significant moat or anything like that, but that doesn't matter. Kind of like this, if they just, if they just do what they do and continue doing what they're doing, they should continue to grow. Their funds they are fairly financial. They are a fairly diverse financial company. They have a lot of things going on, like financial planners. They have their own funds, that sort of thing. But this is what I like to see. So if you look at revenue over time, it's just increases over time. Profit increases over time. If you look at the markup, and this is up here, and we'll go 10 years, the markup of this company has increased over time. In fact, 10 years ago, the markup of this company was 50 million. Now it's almost 300 million, or close enough. So this company just continues to perform year on year, and I have no complaints. Nice growth in revenue, earnings per share, dividends per share, return on equity, return on invested capital, all pretty nice. So no complaints about this company. Now to the chart. This is a company I wouldn't typically trade, although because I do own it for the long term, I could imagine myself trading this. And in fact, there was a bit of a breakout back in February. In fact, that would have been when they released their results in February. Share price broke out above $6.40, and that would have been a good trade. And the share price went on a bit of a short-term downtrend from April through to yesterday, and today, really good one-day counterstick, really bullish one-day counterstick, and is on the precipice of breaking out, a precipice of getting past the highs the company saw back in April. And those highs were $8.37 and just shy of that, $8.20 as I speak. So nice looking chart for Fiducian, no concerns at all. And if you have a look at the weekly chart, apart from that small dip during the increasing interest rate environment, a beautiful looking long-term chart for this company. In fact, you could even put a long-term, could almost put, you can actually put that line right there, almost. It lines up. It did briefly during COVID-19 fall below this uptrend line, but it hits it once and twice. So I'm just going to ignore that. Anyway. Fiducian Group, no complaints. Of course, with the share price up 11.4%, I am not going to complain about that. Now, this company did have a chance of getting in number one, but I decided to not be biased and instead put number one NWH or NRW Holdings. I always get this confused. So the ticker code is NWH, but the company is NRW. What happened to the R? So we have the N, we have the W, we have the H for holdings, but something happened to the R. There must have been another company on the ASX with ticker code NRW, but that company does not exist anymore. Okay, share price up 10.8%. So not that far off from Fiducian's performance. And I'm not a shareholder of this company. I had a look at their results and my first thought when I looked at the results were, these are pretty good. I like these results. That's my first thought. I'm pretty sure this is a mining services company, that sort of area. Let's have a look at what they do. Diversified contract services to the resources in infrastructure sector. So a mining infrastructure services company. Engineering offices, civil and mining businesses. So that's the sort of thing this company does. They're global. Anyway, let's have a look at the results. Nice growth. One thing I didn't do is I had a look at the valuation. So I'll have a look at the valuation in a second. Okay. I did get a little bit tripped up when I looked at their outlook. I'll talk about that in a second. But revenue up 9.2%. EBITDA up 15.9%. EBITDA So not including depreciation, up 17.4%. So depreciation is a fairly big cost for this company if you compare EBITDA to EBITDA. And NPAT with the N, what's the net profit after tax? And what is the N? Up 18.6%. They do have it three. Operating EBIT, less interest and tax. Yeah, what's the N though? Is that normalized? Normalized, maybe it's normalized profit. I don't know. Cash holdings of 246.6 million, 94.9 conversion, and normalized earnings per share. We'll go with that 23 or 27.3 cents per share. Strong order book, nice pipeline, dividend up nicely as well, about 11%. And then I had a look at their outlook. Where's the outlook? They did provide some numbers. Here it is. Some numbers here. Oh, here it is. Guidance. I knew they provide some numbers here. So 4-year revenue, 3.1 billion, and EBITDA of 205 to 250 million. So 3.1 billion. I'll write it down because I don't have a good memory. And 205 to 215 million. So I always look at guidance, and then I go back up to this year's results. So nice increase in revenue. Well, I'm not sure if it's nice. It's less than 10%. So from 2.9 billion to 3.1 billion. And what I didn't realize they were looking at EBITDA, and I saw EBITDA was 334.8 million. I went, oh, that's a significant drop in expected EBITDA from 334.8 million to 205 to 215 million. Oh, but then I realized, and I'm talking about EBITDA. They want to exclude depreciation for some reason, and that's a nice increase, maybe 10% at the height. So another good year expected for NRW Holdings. Now let's have a look at the valuation. So 27.3 cents per share. Share price is $3.53. So we are talking about 13, P ratio of about 13. 353.5 divided by, was it 27? Oh, always, you can see my 27.3. There you go. So yeah, so P ratio of 13. That's based off this year's results, by the way, with nice growth expected in the next year. If you did a forward-looking P ratio, you might have maybe 11. So not that too stretched for this company. But the most important thing is the chart. Well, probably, yeah, maybe that's not true. So NRW Holdings, that's the weekly chart. In fact, the weekly chart looks pretty good as well. It's now getting above the highs the company saw back in pre-COVID. That was $3.40. So this chart actually looks pretty good. This goes back to 2016-15. Back in 2015, share price of this company was like 10 cents. But now, since then, the chart looks pretty good. Let's have a look at the daily chart. So a fairly big drop at the start of 2023. I'm not sure what happened there. But for some reason, the market got that wrong. And this is the definition of, it's not really my favorite type of breakout. I prefer breakouts when the share price is going sideways or consolidating. The share price of NRW Holdings is already in an uptrend, and now the share price has taken off, sort of confirmed the uptrend. So not my favorite type of breakout, but the share price is at an all-time high. And that's a pretty good thing when a company releases the results. And the valuation of the company is not that too rich either. So definitely deserving, coming in number one, NRW Holdings. Okay, so a few companies did not make it into my top 5 stocks, and I'm already at 48 minutes. What I'm going to do, I am going to go through the charts of some of these other companies that did not make it. Starting with Origin. I didn't show you Origin chart earlier, did I? So yeah, this is complete opposite to AG. I just don't understand this one. So Origin down about 10% today, and the uptrend is under threat. Under threat. They did release, just like AGL, some weakish financial year 25 guidance. So maybe that has to do with it because their financial year 24 numbers were quite good. I've already shown you Pilbara and Ladin Resources. Company, a fund manager I've never heard of before. The Australian United Investment Company. And this was a breakout, but it's not my favorite type of company. I had a look at their investments, and they just talked about Woodside, BHP, and Fortescue having lower dividends, and those lower dividends were expected to continue. They had an economic outlook, that sort of thing. And the volume was fairly weak today. So I think this almost is a breakout, but the weak volume has me looking sideways. But not my favorite sort of company. But just because I don't like it doesn't mean you don't have to like it. So Australian United Investment Company, AUI. First time I have ever looked at this fund manager or LIC. It might be an LIC, I don't know. Other companies, BFG, Bell Financial Group. Share price flat. They released their results. The market has been, but share price in an uptrend, not a breakout. Company called APZ, Aspen, not Appen, Aspen. Chart looks interesting for this one. I have a feeling this is real estate. It's something to do with real estate, yeah. A chart looks actually okay for Aspen. I wonder if they have any holdings or any real estate in Colorado. If they did, I'd be more of a fan. We have a very little company called Connection Mobility. This company has a market cap of like $20 million, and chart looks pretty good. This company is profitable. Small, profitable, like revenue $9 million, profit of maybe $1 or $2 million. So not a breakout today. So the market hasn't really reacted, but chart looks okay. Adacel released their results last night. Share price was down, still down, and the chart looks bleh. Chart looks pretty blur. Although I'm going to have to admit something. The results were pretty bad for financial year 24, but they were expecting a nice turnaround in financial year 25. So if they achieve their turnaround, this company actually looks interesting. So possibly all the bad news has been priced in for Adacel. Enero, same with, just like Adacel, I think most of the bad news has already been priced in, and share price has barely moved today. Share price took a plunge last Thursday, down 6%, then recovered the next day. But the chart looks pretty bad, been in long-term downtrend. And I did have a quick look at their results, and I could, if they do start turning around, I could see some really good value in this company, possibly. But the question is about the turnaround. Telstra, can't forget Telstra. This is a breakout. This is a nice little breakout possibly happening for Telstra. Valuation. My only concern about Telstra. Had a look at the results. I thought the results were pretty good, but then I had a look at the earnings per share. Then I looked at the market cap, and I went, company's trading on a P ratio above 20. That's something's off there. Something is off. Let's have a look at Trading View. What P ratio do they have? They got a P ratio of 22.1. I was just thinking maybe I did the calculations wrong. So the profit hasn't increased all that much. So that makes sense. And Comsec says the P ratio is 20.7. I don't know, like a little bit of growth this year, but I would not expect significant growth for this company. So I could lump Telstra with Commonwealth Bank and Woolworths as companies who have a P ratio above 20 that shouldn't. And I don't understand. I sort of do understand in a way. It's a well-known company, safe. And in fact, the chart looks okay. So maybe I should be pushing aside my bias with Telstra Group and just take a position, trading position. Treasury Wines. Nope. I'm going to say no. Share price, not much doing today. Goodman Group, share price was a little bit down last time we had a look. Share price in a beautiful uptrend, and share price, flat. So no significant reaction from the market. ARF, what's it? Arena REIT. Ooh, this is looking a little bit more interesting. Share price up a little bit today, 2.5%, which is interesting for a REIT. Have a look at the long-term chart for this company, and over time it does go up. Yeah, over time, this actually long-term chart looks pretty good. That's actually a nice chart for a REIT. So I have no idea. I did not have a look at these companies' results. So I wonder what they invest in. Let's have a look. ARF. Arena REIT. What type of property they have? I'm just going to have a look at their results. I'm hoping they mention what property or sort of property they have in the About section. Okay, here we go. develops, owns, and manages social infrastructure properties across Australia. What is social infrastructure? Is that like childcare houses or childcare places? I should get more of an insight when we look at the presentation. Well, I think childcare centres. I'm just saying, just based off the first 2 pages, childcare centres, social infrastructure. Let's have a look-see. I'd say a lot of childcare centres. Early learning portfolio. Almost 99% of their assets are early learning. They also have a few assets in healthcare. So Good Start, Green Leaves, Edge, Affinity, 4Health, GA Education, Aspire, Mayfield. Okay, that's all I need to know about Arena REIT. Let's move on to the next one. Chart looks okay, by the way. Centuria Office. We know what this company or this REIT has property in, and that's office. And complete opposite to Arena. No interest, and this is the weekly chart, by the way. No interest in this one at all. What else? Pact Group. This is a takeover bid for this company. I'm not sure what's happening. Results were pretty weak, as expected, but yeah, no interest in Pact Group. A company called Ambotech, another small company, market cap probably 20 million. Share price has taken a massive dive, released something really negative on the 27th of May. Market cap is now 17.6 million, maybe near the lows, maybe. Let's have a look at the weekly chart. Yeah, no interest with Ambotech. And Ryder Capital. I did a video on Ryder Capital many years ago. Ryder Capital, maybe not many, maybe a year ago. Companies, yeah, no, 13th of November, so not even a year ago. ASX companies I knew nothing about. Ryder Capital. And of course, ever since then, I keep seeing Ryder Capital release announcements go, I know this company. I used to not know the company, but now I do. And what I did, this company kept popping up on my radar because look at the chart. Share price moving into an uptrend. They released a really interesting announcement a few weeks ago. It was a positive announcement. And now the share price has dropped a little bit today on their results. And company called WQG, WCM Global Growth Limited. So obviously this is a fund, and share price up a little bit today, up 3.6%. And it's at resistance. So the share price breaks above $1.60. That would be a breakout. Chart looks actually pretty good. Nice little consolidation period. Need to see it break out. Okay, so that's all the companies releasing the results today. I might have missed 1 or 2, but I think I've got them all. And now, finally, Fenix. Just want to show you one chart. Fenix Resources. So I was trading this company, then I sold out, and then I saw the share price go on a pretty big run from 26 cents to 44 cents. And I was kicking myself, damn. But nowhere during that run did I think about buying back in. Now, however, maybe I'm getting to the point where I could think of buying some shares in this company for the longer term. But the share price has fallen a fair bit. I would say the shares are oversold right now. In fact, if you look at the weekly chart, the last 2 weeks have been really unkind to Fenix, down 13.95% last week, down another 17% this week. And I am now back interested in Fenix Resources. Okay, for a longer term. Although the ideal price is 20 cents. I would say 22, actually, I would say 24 cents. If the share price could fall below 24 cents, I would take a position in this company definitively. Okay, and that's all I got for this video because I'm right at 1 hour. So not a lot of times to do other stuff like your comments because it is reporting season. And I want to talk about these companies. So if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.